Here comes my stock market analysis. We're going to look at projections on the S&P 500, but first, this important information. Make sure you read this slide. It tells you about our approach to the market and about you using our information and the very important aspect of trade ownership. You must own your own trade, and then you can manage it properly. All right, in this week, coming into the week, we saw, well, the best advance we've seen in 20 years with 9 up days in a row in the market. But then the index is stalled, and they're narrowly mixed for the week right now. Tariff news is still pulling the market all around. The UK deal was low-hanging fruit. I think most of us know that because the UK was one country that we actually had a trade surplus with. So that deal was not a big deal, as it might have been presented. And of course, this weekend, there's supposed to be talks between China and the US, and it's more like talks about talks, and the market is kind of bouncing around in a narrow range here today as everybody is waiting for the information that comes out of there. That 60% number that the administration is tossing around, and I heard 80% actually this morning, that is not exactly going to be good news for the markets, but maybe if they can come to something like that, it would be a step forward. So, of course, China, the big deal that has to be made, and the rest of the world is probably going to land at around 10%. And I think we all know that. And the deals that we're going to get in tariffs might actually well be priced into the stock market already. I believe that's true. We saw Apple and Google drop on bad news this week as AI is changing the landscape. This is really interesting, and I think that even though Apple and Google look like they have some rebounding period ahead of them, I think that news is really bad news for these companies and, of course, bad news for the stock market. Apple gets $20 billion a year from Google. And that is just so that the search on Apple will go through Google. And of course, Google benefits from that because they sell ads. So that $20 billion might go away. And that's about 16% of Apple's earnings. And Google, of course, that might benefit them if they can figure out how to monetize search through AI. But if Apple drops them, that's a huge amount of their earnings. That's their whole search through Apple counts for about 36% of their earnings. So this is really bad news for the company. It's the buggy whip story where, progress comes and some companies really get left behind as things change. Well, Google and Apple are trying to fix that, but overall, I think it's a net negative for these companies. That would be a net negative for the NASDAQ. For the week, stock indexes just digesting the huge rebound that they have, and they're in positive patterns, and I'm going to show you why I think. Just in the near term, there are some days that we're going to see on the upside after we get past this deal time right over here. So we're going to move forward here, and we're going to take a look at the stock market. We're only going to look at the VIX and the S&P 500 today. And then, of course, we'll look at the market condition monitor. And I'm going to show you our trade planning stack. This is amazing, is all of our apps are all stacked together. And you'll be able to get that based on the special that we're offering. So if you didn't see the level 4 special, which I showed you a little earlier in the show, or if you're watching a clip here on YouTube, please do go back there and see about this special. So let's take a look now as we look at the stock market. We're going to start out by looking at the VIX. Now, this is really interesting. This is a weekly VIX chart with cycle analysis on it. There is a beautiful rhythm in the markets in here that you can see. And what I want to show you is the bottoming timing on these weekly charts. And what happens is that once while the stock market's rallying, of course, the VIX is moving down, and then this area generally takes several weeks before the bottom is made. There's kind of a flattening out in the VIX, and then all of a sudden what happens is that it goes up and goes up sharply as the stock market comes down. You could see that happened over here. This is July, August in 23. Right over here is December 23, January 24. Right over here is the May to June, July period here in 24. This is the end of 24, beginning of 25. And you can see each of those takes a number of weeks. And that's where we are right now in this bottoming time period right there. What I had talked about was that this was the period right in here that the stock market was likely to rebound as the VIX pulled back from that extreme level. And the ideal trough was right in here around the end of April, which means that, 3-4 bars before it or after it, or where the actual trough is likely to come. And that is right in this time period right now. So there's still a period in here where the stock market could rally. VIX just bottoms around in here and then all of a sudden takes off. And we had talked about stock market risk here in the May-June period based on what we're seeing in the VIX. And it looks to me like it's more in June the way this is laying out. So I wanted to show you that. Let's take a look at the daily chart here in the VIX, and I put in this potential basing cycle. So it'll look something like this, like these other kind of more flat cycles that we've seen in here. And what that looks like is that rally, you get a rally up in here somewhere into May, and then it falls off a little bit into early June. And this is where it takes off, like somewhere around the second, third week of June, where VIX really starts to go up, and that implies, of course, potential downside for the stock market. This, I'll show you the S&P 500. The timing on this is different a little bit from what we originally thought. And the key here when you look at the weekly VIX is that it takes a little time to set up for that next upside move. And that's what we expect in here as the stock market tries to get a little bit higher, but kind of struggles to do so, and then ends up getting into a period where it begins to move down. So this is the cycle analysis here as you look at the weekly here on the left. In that bottoming process that you see right over here, you see the cycles here on the right on the daily chart, which this period here on the weekly probably sets up something like this in here on the daily. And so it makes the bottoming process in here, and then you get into the period where there could be a pretty good size decline. Now, we're going to move over now and look at the S&P 500 the same way, and here is the SPX. And let's just blow up the weekly pattern here. So like I said, there's a little more time that the stock market can rally, some number of weeks, and we have the projections in there. Now let's talk about the previous analysis versus where we are right now. So our analysis at the beginning of the year was that we'd see the stock market get into a decline that would take you into May, June. The period of risk was really April, May, June, and we saw it move down very sharply. And we actually thought the extreme level was 5,100, and actually 5,100 is right around over here. It had this panic in there on the downside as there was a huge outflow of money from dollars, anything dollar denominated. We saw bonds fall, the dollar fall, stocks fall, all of that together as tariffs really shook up the world of investors, and they started to bail out of U.S. denominated assets. So we got an early trough in here that formed at around 4,800. This is the low in here was 4,830 actually, and it bottomed here in April versus what we expected. So this is the old harmonics right in here, and this is the shortened harmonics right in here. So that's why we thought it would go down further. But then when we saw the rebound, we thought, well, it might test and come down into this time frame one more time, but that didn't happen. So the original timing of the target at 5,100 actually turned out to be 4,830, and because of the intensity and because of how cheap things looked, then everybody came back into the market, you can see. So the timing was off from our original timing. But once our reversal scout turned up right over here, we knew that things were changing as the momentum was improving, and we see that on the daily. So now what are we looking at? Well, you can see this trough over here and this trough over here. This is a very extreme negative translation. When you get that kind of a translation, it ends up telling you that the probability of getting through the resistances is smaller. It's more, if this was a positive translation, the probability of getting up through the high, like this one right in here, is better than 70%. When it's a negative translation like this one, the probability of getting up to the high is less than 30% and might not even be able to get through that 78.6% repair level. So right now our projections are getting up to this. There's a daily resistance right over here that I'll show you on the daily chart. Let's call it 57.90 right up over there. It's reasonable for it to get up there in the next couple of weeks. This is 58.70 approximately right there, 58.65 or 70, the repair level. If it closes through that, it will warn me that the market is in better condition than I'm giving it credit for. So if it gets up to this level over here, it's going to be at about 190% of GDP. That to me is absurd, just as it was when it was 207% of GDP at the high. Well, these are already historically high valuations in the stock market. I believe it's not going to be able to get through the repair level, but I've believed things before that were incorrect, of course. So I'm just telling you probabilities, and what we look at is probabilistic analysis. So that's what I'm sharing with you right now, is this probabilistic analysis on this weekly pattern, which has momentum turning up over here, and then these projections up here to, let's call it 57.90 to around 58.65. Through 58.65 on a close would be a positive occurrence. I have doubts about that being able to happen. Let's take a look here at the daily chart in the S&P 500, and you will see these cycles in here. They shortened up by a little bit. Harmonics reduced from 21 bars to 20 bars, and that is not a significant change. And you can see how the harmonics in here align up. Now, notice in here, this was a 21-day cycle, 21-day cycle, 20-day cycle. This one in here was 17 to 19 days. So that was a little bit shorter, but really not out of the realm of what is normal. Now, you see it rallied up in here, and momentum turned positive here and positive right over here, as you could see on the reversal scout and on the slim ribbon. Now, it's running out of time. Now, there's a lot of lines in here because I wanted to show you two possibilities that are in here, and that is that we've already seen this low on this swamp cycle right over here, or that maybe this China deal is not good and has one more shot down over here. We thought it would get down to the 23%, 5,500, and then begin to move up again. Under either one of these scenarios, whether it comes down here Monday and Tuesday, or this was the low, then we get up into these areas over here that we talked about, of these resistance areas here that I showed you on the weekly chart, and the attempt to get through that major repair level right over there at 58.65. So either one of these scenarios is positive right now, and you can look over here on the bottom at our option bias indicator, which has flipped over on May 1st or May 2nd to tell you that your option positions have gone from neutral to positive and biasing yourself on the positive side. Also right over here, our slim ribbon PO has turned green. And if it comes down a little bit more and then turns up, it will give you a momentum signal that says positive. You could see the momentum signal right over there that said, look for selling to come in. And man, did that ever happen. Here you could see you got this signal that reversed right there, and it went neutral, and now it's gone positive. So the short-term conditions are positive. I'll show you that on our MCM. And the intermediate or weekly conditions here are positive, as you see there. And here we're looking at both the weekly here, which is, whoops, didn't want to do that. Let me just grab all of this right over here. This weekly right over here, which is pointing to the upside to these levels. The daily, this bullish configuration. And you can learn all about this, of course, by taking our cycle analysis workshop and get a good understanding of how all of this works. This is a fantastic way to understand the conditions of the market and how things change when they do change. And right now, this positive momentum, positive translations holding up well above these support levels is really a positive thing that says the market, though it might have one more dip early in the week, is likely to try to get to the upside over here. Let's just move over here. I'm just going to reveal our MCM, the market condition monitor, and we'll scroll down in here, and you can see that looking at these indicators here, I'm looking at them on a this is set up to short term right over there, and the short term is showing you that these SPY, all of these are bullish here in the short term. And they're giving you only because these weekly signals here and here haven't turned to the upside in the slim ribbon. That's what's preventing it from saying very bullish. So for the short term, this is matching what I'm telling you on the cyclical patterns, the sum of the evidence that we have, probabilistic analysis, that things in here are bullish. For the intermediate term right over here, and this is for people that are longer holders, you can see now that you get slightly bullish readings that are in here. Let's just take a look at the short term right over here and see what some of the stocks look like. What are the most bullish and most negative right over here. So I'm just going to look at trade setup condition, as you see right here, and I'm going to click on that, and you can see the ones that are very bullish here. I'm just going to scroll down a little bit for you to get an idea of the ones that are very bullish. Remember, these are our algorithms built into here, so this is all updating instantaneously, so you can get this kind of information. If you're near term or if you're intraday, we have all of that in here for level 4. Remember, we have a level 4 special going on right now, and you can see the ones that are very bullish, quite a bit in there. Let's switch over to the trade condition setup that are very bearish right in here, and take a look at the ones that are very bearish, and you can see there, well, the drugs, right? Merck, Bristol Myers, you can see that. And wheat, actually, Wendy's, and very bearish in here. So there's a lot of things that are still bearish, very bearish, looking at that. And remember, algorithms. These are, all of the numbers that are in there, and this is calculating it every single minute. So a good look at the market condition indicator. I want to look at some of the other applications. Remember that our level 4 members, we say, you need Thinkorswim to look at our charts, but you don't actually need that because we update our charts all the time. This is our indicator stack that we have in here. Application stack, and this is the ET equities and ETF hub right over here. So if you want to know, I didn't show the NASDAQ today, so if you want to go on the NASDAQ, you could see the daily chart, the weekly chart, the daily chart. It's all in there. Technical details right over there. It's neutral to slightly bullish as we look at that. So you can get all that information in here for the individual stocks there. Also, if you want to get the information for the futures, it's all right in here. And what's cool about the futures is that it has my most notables in there. Now what I do is I make comments in there every time I do these updates, and then you just click on this little exclamation point there, and everything that I tell you about these different groups is in each of one of these most notable. So you can see in here what I said in the gold market and the metals markets, and all this stuff is updated as I update these charts throughout the week. So you get that, of course, as a level 4 member also, and level 3 member also gets that. So, but take advantage of our special we're running. Rankings is fantastic, as you can see here. I love to use the rankings, which also has the directional biases in here. I love to use that for the purpose of looking at the OBI, because I want to know which of the things are very oversold or very overbought. So I'm scrolling down on the OBI, and interesting, there's only one orange right there, and it says that Microsoft is a P1 orange, which says to me, look for this stock to not be able to make a lot more ground on the upside right now, and maybe a short-term reversal in there. So I like to use it that way. If you want to see of the top 84 symbols that we follow, what's positive on the long term or negative on the long term, you click there. Intermediate term, short term, you can just scroll on this, or again, you can see the charts right there in that application. And scrolling down further in here, You can see that Katie's magnificent work on our cycle low timing tracker is right there, and you'll be able to see the stocks that are in a cycle timing of a period of risk. In other words, they're late in a cycle and falling, and they're in a period of risk. The ones that have a bottom pending, these are the ones you might start to buy a little bit of for the opportunity to catch some upside, or confirmed bottoms that are in there. So Katie's great work in there. And it has these color coding in there also. And the last thing that you're going to get also, and here's our momentum tracker, which is for position traders, longer term traders. And you can see it's really great. So if I just go to Apple, you can see Apple right there. And that gives you the longer term setups in here. Conditions suggest intermediate rally is likely ending and the dominant longer term trend is likely to resume. So it's not allowing for a lot of upside. It says Apple's bearish, and you can actually look at the chart in there and be able to see what the what the chart has looked like. Here's the chart right in here, and you'll be able to get the right there. It is showing you just the neutral conditions in here for the longer term. But you could see in here where it was giving you those positive readings right in there as the stock market, as this was still going up, and then it started to lose its momentum here and went to mixed and then into neutral right now for the longer term. So Apple doesn't look that good for a longer term hold. And earlier in the show, I talked about what I thought were the conditions in Apple that could make it challenging based on the news that came out between Apple and Google. Look at this incredible information that's in here. And like I said earlier in the show, I gave the opportunity to look at becoming a level 4 member, and that's at our amazing offer of just $99 a month for the first month. And it's non-recurring. So you get to look at all of that stuff for $99, get all of our analysis, our whole video library. There's over 1,000 videos in there, and so much that I've taught in trader psychology or style, strategy, and plan, or stock sectors that the team does. Just so much in there. So please do consider going back, looking at that special that we're offering, and then signing up for just $99 for 1 month non-recurring. So this is an amazing special that we rarely offer. This is our level 4 top tier, a special trial which is non-recurring. This is for first-time subscribers or for premium members that upgrade. You're going to get our amazing MCM Pro. You've seen us demo the market condition monitor, and you'll be able to get alerts with our desktop app on the multiple time frame trade setup conditions. So important for you setting up to be able to be on the right side of the potential largest impulses. You'll be able to get our multiple time frame charts, our entire focus list of 84 symbols of the best traded stocks and ETFs. You'll be able to import and save those and view them live on the Thinkorswim platform. And you'll get our proprietary studies, our Slim Ribbon PO, Reversal Scout, Market Condition Indicator, Option Bias Indicator, and more. And you'll be able to import and save those and keep those live on the Thinkorswim platform. Also, you're going to get our TOS Grid Archive. These are our custom chart grids where you'll be able to get our proprietary indicators built in by our analytical team and then be able to see any symbols that are on those particular grids with our indicators built in there. You'll get comprehensive support, Q&A with askSlim, analysts on Discord, our webinars, videos, best practices for utilizing the askSlim custom chart and studies, and you're going to get full membership access. That's everything in level 4, 3, 2, and 1, everything that we put out there. There is so much, including our massive library of videos that we've produced, and that has, of course, our very special Future Speak show on Wednesdays that Arvi does an amazing job with just tons of teaching and analysis in that. This is a special 1 month trial for level 4, 37% off, $99 instead of $159. And again, this is non-recurring. It's a one-time use, and you get to see everything and have everything that we do. There is so much learning that you can do in this month. And then if you choose to stay, you'll be offered a special link for another discounted price to stay on with us. You want more info? Write to Matt at askSlim.com and you can get more info, or else go to our front page and you can see right up over here, special offer, save 37% on level 4. Click in there, you'll see the information, you'll see a link if you want to sign up. This is an amazing opportunity. Don't miss it.